Hi guys, so obviously in the last lesson we highlighted our zones within zones. Okay, so we got our 15-minute zone within our 4-hour zone. We went over identifying our leg, where our break of structure is, where our freshest zone was, and then identifying our zone in our zone, and then when to get in. Okay, so this one is basically a video on kind of reducing your risk, which is what we always want to do, right? We always want to control risk. Too many people are focused on making the money and not on controlling the risk. So we want to minimize our risk as much as possible, because obviously we're not going to be right 100% of the time. So we want to make sure that when we are right, we are controlling our risk, or when we are wrong, sorry, we're controlling our risk, and that if we do get taken out, then we're not losing masses of capital. Right, so if we traded the 4-hour zone, let's say on this example, then obviously it would be, you'd be looking at a well over 100 tick or 100 pip stop loss, 130 almost. If you trade the 15-minute, then obviously that reduces the risk, and then we're looking more at a kind of, what's that? That's probably like a 60. I'd say a 50 to 60 pip stop loss. I don't like to trade more than 50 personally. And then if we break it down, we can look for confirmations on the 1 minute time frame to reduce that risk even further. So how would that look like? So let's break down to the 1 minute. Okay, let's see if we can find that area. Should be down here. Okay, so you can already see. Now, what are we looking for? Essentially exactly the same on the 1 minute time frame we're looking for on the lower time frame. Okay, so when price pushes bearish, we want an indication that it's going to push bullish, right? So what are we looking for? We're looking for a change of character, and we're looking for our freshest zone. So where do we see the change of character? Right here. So this is our high, right? Okay, price is doing this all the way down, forming higher lows, lower lows, higher lows, low lows, higher lows, low lows, higher lows, lower lows. Price then changes direction, or changes character, sorry, and then starts pushing high. What do we then want to see? Exactly the same as we said before. We want to find our freshest zone, which is this one here on the 1 minute time frame. Okay, which massively reduces your risk. So again, we said about the amount you're risking on the 15 minute compared to the 4 hour. So again, you then don't have to have your stop loss all the way down here. You can have it just below the previous low where you got the change of character. Okay, and you're looking more at, say, 20 pip stop loss, a little bit less, 18 pip stop loss, and then obviously you can then decide where you want to have your TPs at. We'll go through take profits after we've gone through where we're going to get into the trades first. But yeah, so again, you can get in there comfortable with that. If you're not comfortable with that, then obviously you get another one here, so you get a break of structure here. Okay, you get a fresh zone here on the 1 minute time frame, fresh zone there, touches in, pushes. Again, with that one though, I would still have your price, your stop loss, sorry, below that low. So again, still a little bit of a wider one, still less than 30 ticks on that one. Because I believe, yeah, price obviously comes, it does come back and retest here. So that's why you want to make sure that it's always below that lower low. Okay. So spread, like it might take you out with spread if you've moved your, depending on what broker you've got. But again, you can drag your zone across, and then you can always decide to get in again there anyway. Okay. So a couple of times you could see about entering in on your zone, right? Okay, so we've got stop loss at the previous low. Shouldn't take that out, to be fair. Again, depends on the spread on the broker and what broker you use. And that is a massive risk to reward. Again, obviously I won't drag it all the way up, but for those that are obsessed with risk to rewards, price just flies. And again, TP, you can always have your TP at the 50% of fib, and you'd be looking at a almost 20 to 1 risk to reward or 19 to 1 risk to reward ratio on that trade. All right, so again, same thing as what we look on the larger time frames. For entry is exactly the same thing that we want to look for on the lower time frames. Waiting for price to come into the zone, right? Don't get over eager. Like I see so many people think, oh well, price is in my 4 hour. It's given a reaction. I've missed the move. Blah 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 blah. You haven't missed the move. You just got to be patient. Price will come to the 15-minute zone. That's why we do it. It's the freshest 15-minute zone. We're holding out for that. If we miss a trade, that's fine. It doesn't matter if we miss a trade. We'll hold on to the next one. Okay. It's all about high probability. Taking the best trades. Okay. It's not about you don't necessarily have to trade every single day. You don't have to trade, every 30-minute zone, 15-minute zone, hourly zone. You don't have to trade all the zones. You want to aim for the higher probability zones. And this market structure strategy will give you that higher probability zone. Okay, so again, 1 minute time frame, selecting the fresher zones. Okay, even the lower zone, it comes into the lower zone twice and touches in and pushes away. The zone holds nicely, and it's a solid trade. So again, waiting for price to come into our zone. Okay, getting that change of character. Okay, where did price which 1 minute candle produced that change of character? Okay, so it's this one. This is our freshest zone here on the 1 minute because it caused this change of character. Price pushes in and boom. I mean, even if you only traded on the small time frame, okay, that's still a 1 to 2 risk to reward. If it's gonna it's not going to go on 2, but literally a 1 to 2 risk to reward. I know some of you are just like happy with the 1 to 2. That's a nice 517 to 549. That's a nice 32 pips just there. Okay, you're quickly in and out of a trade within kind of like an hour. Okay, that's it. Nice profits. Day done. Job done. All right. It's also in the evening as well. So I know some of you work. You might work the 9 to 5. This is at 8 o'clock in the evening. Price comes down to the zone. You can set your indicators on trading view to wait for price to come down to your zone, so you're not looking at the screen all the time. Like if you sign in, create an account on trading view, sign in on trading view on your phone and on your PC, and once they're linked, you'll get alerts on your phone. So then you can literally, okay, price is now into you can either highlight your 4-hour zone or your 15-minute zone, add alert. As soon as price pings through that, it will then set an alert on your phone. Okay, quickly jump on my phone, have a look for break it down to the 1 minute time frame. Seen the change of character. Great. This is my zone. Price pushed in, boom. 2 for 1, done in an hour. Okay, that's good. I can then go watch the football or whatever you want to do. All right, it's simple, it's easy, it's effective. And that's what we want to do. And it's reducing risk as well. That's the main thing, reducing risk and making trading as easy as possible. All right, so this one is a quick one because this is literally all you have to do. It's just identifying the entries on a 1 minute time frame opposed to obviously being on the 15-minute time frame. Okay, you could, again, even if you wanted to then get in on this zone, it's not the best entry. You're not getting the best price, but as long as you've got your stop loss below that low, you're still going to have a decent trade. Okay, but you could have even got in this one, you would have got a 2 to 1 risk to reward from this area as well. Okay, because the price pushed up, this candle caused this break of structure here, so you can use that zone. Obviously we went in this zone because it caused a change of character, touched in, boom. This one calls breaker structure, use this one, boom. Okay, it's that simple, that effective. Right, so I hope that was valuable for you guys. It's literally just the same thing. I won't drag on because obviously it's literally the same thing from the bigger time frame to a smaller time frame. Okay, so we've used our high time frame of the 4 hour, we've used our medium time frame of the 15 minute, and then we've used our lower time frame of the 1 minute, and that is literally that is it. Okay, so I hope you got some value from this one. It's a quick one, and I hope to, yeah, I hope you got some value, and I'll see you in the next one. The next one, we will go over kind of looking for the pullbacks, a little bit more into market structure on buying and selling, kind of from the 50 from the using the 50% of fib, and then we'll continue to look at take profits later on as well. All right, so just a nice quick one, and I'll see you in the next one.